So, what exactly goes on a law firm's chart of accounts? And you may have purchased QuickBooks and you've got this generic chart of accounts that's really for a contractor. Half the time, I have to go in the batch and just undo them all and just make them all inactive so I can get my set chart of accounts in place. A law firm's chart of accounts is very basic. It doesn't have a lot of extras, but there are a few specific places that are designed for the legal sector. And I'm going to provide you with a list of where things should land in as I go through this on the video, and then obviously it's attached on the article as well. And you want to make sure that the accounts are put in under the right category and the right account type. That is important. So getting it right from day one is going to help you have an adaptable framework. It will simplify your accounting complexities associated with managing multiple areas and will also help you stay compliant. So remember, if you get a hold of that client's tax return, that's a piece of gold for you to kind of see how things are laid out on the tax return, so you know where things go for any particular client that you're tailoring their file to the law firm client's needs. So it'll allow you to track funds between operating accounts and pooled trust accounts. It's important. And you might even want to have them in there like operating and then list the operating accounts. They may have a payroll account. They may have a savings account. They may have an operating account for their overhead. And then you might want to have trust accounts, and maybe they've got multiple trust accounts. You want to have a category for header and then sub them down so you can collapse them to get that total that's in the trust accounts, for example. A law firm chart of accounts is really essential for any accounting system to work properly, and you really want to structure it as such to meet any compliance requirements that are around the legal industry. So let's start with the balance sheet. So obviously there are assets, and that's anything that's owned by the firm. We see often they might have a building on the firm, but typically not. They may have a vehicle on the firm, but typically not. A lot of times what we see as assets are the operating, the cash accounts, the checking accounts, trust checking, payroll. Those are ones you'll see. Maybe petty cash is another one that you'll see. And then anything without value, maybe office furniture, websites. They spend lots of money on their website. That's also considered an asset if they spend a ton of money and that gets depreciated over time. So there's fixed assets. If they have any long-term investments that are subject to depreciation, that will also be on the books. You might have some liabilities there. You're definitely going to have the funds held in client's trust account funds in there with the sub account of all the client listing underneath that you'll collapse up to get that total that goes in the trust account balance. And that trust account liability account has to equal that trust bank account. So it's important. You might see loans in there. You may see credit cards, any long-term debts will be listed there. And then the equity section, it's always interesting. So it's going to refer to those having any ownership and stake in the business. And the naming of that will depend on the type of firm. Is it a partnership? Partner equity, partner share, partner contributions, distributions? Is it a sole proprietor? Is it a corporation? Is it a share? Are they shareholders and not partners, but shareholders in the business? They have shares of stock that they have. So you want to make sure that they're named properly to make sure that it looks good when you hand those records over to the tax professional. Another thing to consider is they're going to have accounts receivable, which is an asset, and they're also going to have some advanced client costs. The advanced client cost account is also an asset. Make sure that that's written up properly. The credit cards may look like a parent account and sub accounts. Make sure that's proper. So you've got the parent and the sub, and you end up doing the reconciliation at the parent level. Now we get into the profit and loss accounts, and those are different. You will see, for example, legal fee income might be one. If they have software, you're going to have one legal fee income account. If they don't and they want to bucket it out into different practice areas, you can do that. For the most part, we only use one because we use the software. You may have expenses like billable expenses, and then you may have an account called billable expenses unrecovered, that they spent money on a client expense and they are not going to get it back from the client. It has to go somewhere. That's where it goes. You'll see rent, utilities, parking, travel. Those are typical business meals you might see on a lawyer's chart of accounts. So that's kind of tweaked. We keep track of bar dues separately. And really it's set up any way you might want to create a layout that benefits the client that you can collapse for the tax person. Some of the detail they might not want to see, but maybe the client wants to see. You really want to use a product like QuickBooks or Xero to track the firm's finances. Really don't want to be using a spreadsheet. So know that that's something that should be considered really right from the beginning. Even if they don't have a lot happening, it's worth it to have QuickBooks in place and set up, and then start to manage those client advances, advanced client costs, the trust funds. You want to have all this documented in a really clear way so that if you ever get audited by the bar, you're able to produce those records really quickly. And setting this up is important, right? So you want to ensure that the trust account piece is really important, having those individual client balances on it. Establish also an interest payable account. So you want to have that interest clearing account so that on the IOLTA, as the interest comes in and the interest is swept away, you've got that in and out that you can track it, because sometimes that doesn't get taken out, or you might get it taken out, not given. You have to track that. You'll track that for your client. Another one I like to see on a client's books is a bank fees or wire fees reimbursed. So sometimes they take them out of the trust account and you have to reimburse them. So that's another account you want to see as a sub liability under that trust header, because that will affect the trust balance when you're trying to balance it out. I also highly recommend you get external legal tech software like a Lien Law, like a Clio. It's going to really optimize your financial management, and it will help you to integrate with QuickBooks, track the cases. It'll help you track the payments coming in, track the trust accounting. All of that's so, so important. Client expenses are important as well, because you got to track them, because if you end up not recouping them from the client, guess what? You're going to pay for them. It's going to become a client expense. So it's important to have good firm setup. It's the firm's financial foundation. So have a good setup, have a good chart of accounts. It's really important and critical and crucial in maintaining accurate financial records, generating reliable statements. You hear me say garbage in, garbage out. You're going to have perfectly aligned records that will help the client to be able to really manage the firm's funds. It will help with firm growth, knowing where you're at. You're going to have something to compare it to with benchmarks. There's just so many things that you can do with a properly set up accounting platform. Right down to your assets. Get a good product where you can drag and drop a copy in there so that it's there for the tax person. Even when it comes to loans, put that backup in as you're starting to tie back a client's books at year end. You want to have this at your fingertips. I hope this is helpful, and until next week, bye now.